Dilip Ratha, who I think everybody should know, works at World Bank, heads up the migration unit. And I sort of always joke with him that of the 200 million migrants or whatever they are, he seems to have his pulse on each one of them. And, oh, there he is. Dilip,
Okay,
good morning. Can you hear me?
Good morning, Mohit.
How are
yes,
you?
I can. Very well, very well. Thank you.
You look very bright for somebody who's still got, it's very early in Washington. So sorry to wake you this early.
It is a sunny day out there, so it's all right.
Excellent. Oh, you can see us. Oh, okay. Sorry about that.
I see you very well, yeah.
Excellent. Well, Dilip, I was just, not that you need any introduction, but I was just introducing you, so it's perfect time. But I will hand it over to you, and then we'll open it up for Q&A later. So, all yours.
Well, thanks, Mohit. Thanks, Veronica. I can see you as well, and thank you all that I'm able to see. The video quality is surprisingly good, but it would have been better if I were there in person, which I couldn't do. I'll make a presentation, and then I'll end with a question to you, which you can respond later. So let me see if I can share my screen. Should be fine. If you are able to see my screen, please let me know. Is it okay?
Yeah, it's great.
Wonderful. You can also see a bit of yourself somewhere there. So I'm going to move it to the side. So I want to sort of start with the big picture on migrants and refugee stocks. And I just came back last week from, I was in Jerusalem for actually quite an impressive conference they organized, the National Library of Israel organized on migration, culture, and identity. And I got a very surprising question there. There are very few questions that surprise me because I have been doing this for so long. But this was a question about the word stock. And the moment I heard the word stock, I got a little scared because obviously there was a reference to cattle and animals. And coming from finance and statistics and economics side, to me, the stock meant just accumulated flows of migrants. I didn't really think of stock in the same sense as cattle stock. But we are going to now have a conversation with statisticians about what word we could use other than stock. It was a surprising question. That said, globally, there are 266 million international migrants. And out of that, 26 million are refugees. Out of the 26 million, actually 5.4 million are refugees from Palestine, or they're called Palestinian refugees. They were not all refugees, they were not born refugees, but they were born to parents who were refugees. So this goes back to 1948, 1950s, early 50s. So if you look at sort of more recent or non-Palestinian refugees, there are about 20 million roughly, globally. And most of them, about 85% of them, are in developing countries, which is probably a bit of a surprise. Now, the rest of them are economic migrants. The word economic, we don't know what word to use, economic or voluntary, but that's about 240 million. So if you look at the total stock of migrants, refugees are roughly around 8%. And a similar statistic then is important to bear in mind about internally displaced people who have been displaced within the country and people who migrate within the country. That is the internal migrant stock. Internal. Again, the internal migrant stock is roughly 750 to 800 million. And internally displaced people are roughly about 40 million, plus some refugees, but refugees are international. So really 40 million out of 750 million or more. So again, the number is, is a very small percentage, which is forcibly displaced people. I mentioned this just to put things in context. If you're working on remittances and you're working with migrants, there is often a confusion between internal and international and forced and not forced. So this is to say that most of the migrants in the world are actually voluntary economic migrants, which means that they send money home. Most of the migrants migrated to be able to earn more and to be able to send more money home. So remittances are an integral part, integral motivation and result of migration. And that is more so for migration internationally. Another stylized fact, which I probably don't have the picture to show you, is that in corridors like, let me see if I have a chart to show. I don't. In places like sub-Saharan Africa, 70% of the international migrants are in the region. So intra-regional or south-south migration is very significant. So it is intra-regional or inter-regional. So money going from, so people going from Asia to Africa, money going the other way, or people within Africa, from one country to another country. Intra-regional migration and intra-regional remittances are significant. The bad part is that intra-regional remittances are very costly, more costly than money coming from the so-called north to the south. I'll talk a bit about that. Now, for the future, if you begin to think about 2050, we have more recent data for 2030, but I don't have the exact numbers yet. We would be releasing that data April 12th, I think. That's the date at the time of the World Bank and the IMF spring meetings. So if you think about 2050, the first column, if you are able to see, of the table shows the change in working age population between 2015 and 2050. 4 years have gone by since 2015, so the numbers will be a little lower now from now until 2050, but it gives you an order of magnitude that more than 2 billion people would be joining the workforce by 2050. If you assume that the employment rate in every country in the world remains constant, it continues at the same rate as in the year 2015, by 2050, then only 1.2 billion jobs will be created, leaving about 900 million people out. They are working age people. They would be looking for jobs. They would be mostly in Africa, many of them in South Asia, some of them in East Asia, and in fact, there will not be many of them in Central Asia or in Eastern Europe or in Europe, Western Europe, or in the US. Most of them will be in Africa, South Asia, and East Asia, Southeast Asia actually. And they would be looking for jobs and they would not find jobs. That is an indicator of migration pressure going forward. That also means that these people would be migrating internally, most likely, because the North, Europe and US and Australia and New Zealand and even the richer countries in the Gulf and Singapore and Hong Kong, Korea, Japan, they have great border fences, whether it is visible or not. They have good immigration controls. I think they will be able to guard their borders. It would be a lot of movement within the South from developing countries to other developing countries, from poor countries to other poor countries. And since most migrants don't like to go too far, nobody likes to go too far, but particularly the poorer the people, the nearer they want to be next to their family. they will not go too far. A lot of movement would be literally across the border to whichever country they can get to. So that's sort of the big picture. What that also means is a significant increase in the flow of migrants. I think it might be more like a doubling or tripling of the flow of migrants on an annual basis. That also means significant growth rate for remittances. So that's an important big picture I wanted to leave with you. Now going to remittances, which is the main focus for the presentation. In December 2018, we released data, and by that time, our estimate of remittance flows worldwide was about 700 billion US dollars. But remittance flows to low and middle income countries was 528 billion. Foreign direct investment flowing to the low and middle income countries was about 541 billion. You can see foreign direct investment is getting very closer to the size of remittance flows. Foreign direct investment includes all the multinationals opening businesses all over the world. Now, if you take China out of this picture, China alone receives foreign direct investment of about 260 billion or so. Actually, it's a bit more than that. I don't have the latest number. I have it, but I don't have it in my mind. If you take China out, foreign direct investment falls by half. That's the line I have drawn there, just an indicative line to show that without China, excluding China, foreign direct investment is maybe around 300 billion or less. And in that sense, remittances as recorded officially are already twice as high as all the investments going through multinationals. Of course, then remittances are often compared with official aid because remittances are not a liability creating flow. It's a one-way transfer, unrequited transfer. You just send it like a gift item, don't ask it back. That's the sort of beauty of this particular economic variable. ODA, or part of official development assistance, part of development aid, has that grant component. And it's not the grant component, including even the private credit and all that. The total amount is roughly 150 billion. So remittances are now more than 3 times the size of all development aid put together. This is a well-known fact. It is just that there are hundreds and maybe even thousands of agencies looking after ODA. For remittances, it is really all up to you, money transfer agencies, and what you do with the flow and how you send it and how you interact with the financial sector, the banks in particular, and how you deliver the money and how much you charge. It is really up to you. There is nobody else looking after remittances. It's kind of small change that has been ignored. So this is the next slide that I put out here is kind of a time series description of the evolution of remittances compared to official aid, foreign direct investment, and also flows going through the bond market and stock markets to developing countries. By far, remittances are going to overtake foreign direct investment by next year. Top remittance recipients have not changed much, but India was a bit of a surprise on the positive side. There was a 12% increase, I believe, in remittance flows last year in 2018. So it has reached about $80 billion in India. And then you have another surprise in the top 5, India, China, Mexico, Philippines. The 5th one is Egypt, and the 6th one is Nigeria. Egypt was a bit of a surprise on the upside for us with $26 billion flow of remittances. The actual number might be a little higher than that because we estimated this in November. So we are waiting to update that number now, soon. So April 12, we will have new numbers that we would be releasing. Nigeria, 25 billion, is also a bit of a surprise on the positive side. But we knew that Nigeria receives a lot of remittances. The other part that many people don't pay attention to is that the smaller the country, the larger the dependence on remittances. And it's an obvious point that smaller the country, less diversified the economy, more the migration, and therefore more the remittances. So Tonga, Kyrgyz Republic, Tajikistan, Nepal, Haiti, these are countries where remittances are more than 30% of the GDP of the country, national income of the country. In terms of regional trends, last year in 2018, Europe and Central Asia was a surprise with a 20% increase. And then South Asia, as I mentioned with India, particularly about India, 13.5% increase in South Asia. And in both cases, it was the local currency movements with respect to dollars that had an impact, particularly in Europe and Central Asia, where Central Asians often go to Russia, as you know, mostly go to Russia. And if the ruble strengthens against the US dollar, then the same amount of remittances going in ruble terms to Central Asia appears to be a larger amount in dollar terms. So that's the phenomenon of 20% growth last year, ruble strengthening against the US dollar. We see a bit of that kind of a play in exchange rates between remittances going from, let's say, euro in euro denominations to North Africa, because money is going in euro denominations. And if the euro strengthens against US dollar or vice versa, weakens against them, that has kind of a apparent effect. It can have real implications, but we don't need to analyze that too much, I suppose. So that's on regional trends. One aspect that is good or bad for the remittance industry, I don't know. I think it is really not very good news that there is actually a sustainable development goal agreed upon by nearly 200 countries, so 190 odd countries, to reduce remittance costs to 3% by 2030. I think you will probably laugh when you say 3% by 2030. I mean, of course, the costs are lower than that in many corridors already. But as I point out in this particular slide, based on data from Remittance Prices Worldwide database, Angola to Namibia, South Africa to China, Nigeria to Benin, a lot of the South-South intra-regional remittances are very expensive. And some of these corridors are like 20%, 21%. It's not good. And you may say, oh, how does it matter? Because the flow of money is not very big anyway, so how does it matter? It does matter because the flow of money is endogenous. It reacts to the cost. So if costs are low, flows will increase. And indeed, that's an interesting point I want to bring out, and it hasn't been emphasized enough in the market. It is that cost elasticity of remittances is actually is more than one, meaning that if cost falls by 1%, flow of remittances will increase by more than 1%, and the total revenue from fee income will increase by more than proportionately. Overall, there will be an increase, and therefore, actually, by reducing cost, you would make money. I tried to tell that to some money transfer agencies, and they almost threw me out of the room. Beyond the cost of remittances, I have always felt the need, and I still feel it, strangely enough, that there is too much fragmentation in the remittances market right now. Lots of startups. Since my TED talk, I have talked to hundreds of startups. Very few have been able to go from private, for sort of private funding, family round, friends and family round to Series A. And out of that, very few have gone from Series A to Series B. There are only literally a handful of them. And I have felt that that is because remittances are perceived as, first of all, not that important. Secondly, with the de-risking behavior by banks, money transfer agencies having difficulty opening bank accounts, there is a perception of risk towards remittances, which is uncalled for. And in general, there is fragmentation in the market. So creating a non-profit remittance platform, non-profit doesn't mean loss-making. Non-profit means making a reasonable, agreed amount of rate of return. So you could say cost plus 5%, cost plus 10%, cost plus 12%. Please don't go above that. Having a cost plus kind of model to build a remittance platform and bring a whole lot of remittance companies together could actually be a major disruption in the market in a very positive way. And if that happens, then you could add value. And this is something that Mohit often says also, that don't plan to make a lot of money from remittance fees, but think about other value-added services, like harnessing diaspora investments through diaspora bonds, promoting financial inclusion by offering saving products and lending products, offering micro insurance product, in particular health insurance product. And then at the macro level, once you have the remittance platform and a lot of flows come out to the surface, this true size of remittances might begin to look like $1 trillion as opposed to $500 million. And at that point, you would see certainly the credit ratings of countries like Lebanon, Philippines, Bangladesh, Kenya, Ghana, Egypt, Morocco, Jamaica, Colombia. I can go on naming about 40 odd countries. The credit ratings, sovereign credit ratings would increase by 2, 3, 4, 5 notches. So it would go from B or B minus to double B plus. Some of them will go right through the investment grade rating to triple B minus and triple B plus, as it happened in the case of Colombia. When remittances were properly accounted for, the rating of Colombia, the country, increased right through from sub-investment grade to investment grade. Then there is the lesser known phenomenon or technique for mobilizing large amounts of bond financing. And here I'm talking about mobilizing $1 billion bond financing through using future flow securitization tool. That is not that easy right now in the fragmented market structure, but it could be harnessed. And the idea is very simple. It's a bit like if there is a flow of water, a current of water, let's say flowing through a river, you put a turbine somewhere, and if the turbine turns, that creates electricity and water keeps flowing. It's a bit like that in terms of remittance flow going from Japan to Brazil. You set up a turbine in Bahamas and create a special purpose vehicle, and that entity then issues bond financing, and the flow of remittances is not affected. This is not a made-up example. This has actually happened in 2002, 2003, 2004. Banco do Brasil, Unibanco, Banco Bradesco, I think they raised over $4 billion in those 2, 3, 4 years by securitizing future remittance flows from Japan to Brazil. And then you have this whole issue of mobile money and cryptocurrencies. I won't go into that too much for now. So that would be it. And I want to leave you with another point, which is considered a sustainable development goal indicator. It is the indicator for recruitment costs, recruitment fees that migrants pay to unscrupulous labor agents to get a job abroad. It is very prevalent in the South Asia to Gulf GCC corridor, where it is possible that a Bangladeshi construction worker looking for a job in, let's say, Dubai, pays about $5,000 or $7,000 to a labor agent. All of it is illegal. And the person is paying that to get a job as a construction worker in Dubai that pays less than $2,000 per year. So for the first 3 years or so, 36 months or so, this person is sending money home. So remittances go up, but really it is to pay the labor agent. It is not for the family. So that phenomenon is an indication of modern day slavery. It is modern day slavery because often these migrants borrow money to pay for that recruitment cost upfront at interest rates ranging from 36% to more than 50%. And if your interest burden is, let's say, $2,500 because you have taken $5,000 at 50% interest rate, and your job is paying you less than $2,000 a year, you are a modern day slave for life. This is just, I wanted to leave that with you. It has connotations for remittances, and I don't want to go more into it. This chart in particular is actual survey data that we conducted for the Pakistan to Kingdom of Saudi Arabia corridor. And as you can see, a lot of people who are poorer, they end up paying a lot of money to labor agents, and the monthly foreign earning equivalent of the fees can go up to 25 months, 30 months, 35 months sometimes. So let me stop there and take a few questions.
Is this working? Great. Dilip, thank you so much for that.
Please?
Can you hear us okay?
Very well.
Great, thank you. I always say that you're the sort of social conscious of the money transfer industry, and the empathy that you have for the migrant, I think, is really admirable, because every day while we're busy running our businesses, we forget that behind the service, you're really connecting two families, and sending money is so crucial. So thank you for bringing that to life once again. Questions for Dilip? We have one right there.
So, thank you, sir, for the brilliant presentation. I think it gives us a lot to think about. My question is based on the South African market. I do know that our fees are exorbitant and not exactly the best customer value proposition. When you looked at the fee, was it in consideration of the rand to dollar FX plus margins, and then the dollar to local currency, and then with the fee itself, was it based purely on fee and not FX conversions?
Mohit, shall we group the questions?
Yeah. Did you hear that? Did you get the questions there? Or?
I did, and okay. I see Michael there. Hi there.
I'm not going to let Michael answer that one, it's for you. So I think the question was, when you tracked the fee, did you look at the FX component, and did you triangulate via the dollar to the local currency? Or was it purely a fee and FX, or fee or FX? How did you come to that data?
That data is from the Remittance Prices Worldwide database. I wanted to thank our colleague for the question. Yes, that it is from the Remittance Prices Worldwide database, and in principle, it is not supposed to include the foreign exchange fee, in principle. Now, the market data that is collected sometimes has problems. So, that is one thing. So I can't be sure that it does not include the FX fee on both sides. But you have spotted a very important phenomenon there. When you have to go through another intermediate currency, foreign currency, hard currency, then you are paying the premium twice. And in both cases, especially in corridors where there is not a lot of liquidity, market volume is low, foreign exchange cost can be very, the premium can be very high. So you have spotted that problem very well. I actually, long time ago, once I walked into a money transfer company in Benin, I just said, because I couldn't speak French, I just said, I want to send some money to India. I look Indian anyways. And the person wrote down the fees at that time, and I had that slip, a little slip of paper written in a African French hand. And I calculated the cost at that time at, I think, roughly 36%. It was really, 13% was the cost of sending money, and then the conversion from CFA to dollar and dollar to rupee on the other side. So this 21%, 22% numbers, I'm not confident that it does not include the foreign exchange premium. But even if you take, even if it did, the fee component would be very significant and very high, exorbitant. Remember that we are talking about also small $200 denomination here. I mean, average $200 size of remittances. We are not looking at $1,000 or more, because if you go to larger amounts, the cost falls rapidly because of the bracketing price according to brackets.
Right. I must admit, I thought it was the total cost, but we will double check.
Yeah, because when you do look at the South African market, I think we all are at the same place where we can say that because the margins are not governed by any regulatory bodies, different entities play with different margins in different corridors. And I think the bad part of it, okay, for me, I think I'm more also in the same space that Dilip is, where the social part becomes very important to me. Where if there's a key corridor, regardless of the customer and his needs, if there's a key corridor like Namibia to Angola, the average RPT is $128 made by the remittance companies out of Angola, right? $128. And we're talking about, okay, so this is my last slide, we're talking about 3 years ago, right? So my point being is that what happens is because it's not regulated, the margins are not regulated, then different banks, different institutions put up margins according to what they are projecting would be their financial data. I think that's where it becomes difficult from an SA sort of perspective. So that's just my 2 cents.
No. And look, I know, Dilip, you and I have had extensive conversations on this. I mean, I think the SDG goals of 3% by 2030 or just lowering prices, is an important thing that we all need to focus on because we can't be charging. But I do feel it's unfair. I think 2030, setting goals at 2030 is irrelevant in the private sector because you may not be alive or dead by that time if you lose your bank account. But irrespective of that, I don't think just focusing on price is the right thing because there's a lot of cost involved to get licenses, to get systems in place. Money transfer companies are not charities, right? So why don't we focus on the issues and solve the issues like de-risking, like refunding, like harmonization of the compliance environment, the regulatory environment. And costs will come down to nearly zero. Right, so just focusing on 3%, as you rightly said, Dilip, that, I think most people would say, can we increase our fees then to 3% because we're not getting 3% today anyway. But yes, there are certain corridors where clearly it's an issue, but competition will drive that down eventually. So, great. Any other questions for Dilip? Dilip, our favorite topic, de-risking, that we keep talking about. What are you seeing from a World Bank perspective? Any change? Is it still the same? Is it getting better? Is it getting worse?
I will get to that question, Mohit. I was anticipating this, of course. But I wanted to make one comment that although the SDG goal is to reduce remittance costs to 3% by 2030, and then also there is a byline there, cost of sending money to Africa should be less than 5%, or meaning in no corridor cost should be more than 5%. That is sort of the language. Now, in terms of what to do about it, there was a lot of discussion among the countries about price fixing and guidelines on pricing, and clearly nobody wanted to put any price limits. So no administered price, no pricing through decree, but create competition in the market, remove regulatory barriers so that there will be entry barriers, so that there will be more entry of new players and more competition in the market. That was the way forward. That is the way forward. That is how governments want to work on that. So no need to worry about price fixing. I just want to clarify that. And on the question of de-risking, I'm afraid there is no great news there. I don't see any major progress on that topic. Nobody is buying the point that small remittances are not money laundering, which we have been talking about all this time. And there is a disconnect between the security agencies, Department for Homeland Security, Interior Ministries, Ministry of Defense types, and the Finance Ministry type and the Development Ministry type in all countries in the world. It's a surprising disconnect. And it is the former, the ones interested in national security, they want to go after every remittance transaction so that they want to know, actually more than money laundering, they want to actually get at terrorists. And the other side is more ambivalent. They want to actually do something to address the question of de-risking, all sorts of clarifications that banks are not supposed to stop opening bank accounts for money transfer companies. But it is lukewarm because it's always, again, qualified by statements from the defense and security side. So there is no good news. And then, of course, you know the story that places like Somalia and all are hurting so much that there are all these stories, including 2 years ago the Wall Street Journal story that came out about the Somali money transfer guy really carrying $1 million in cash in a suitcase, getting into a business class seat on a plane to Dubai. And beyond Dubai, what happens is not explained. So the Treasury Department has given in the US a certificate to this guy that he can carry that much cash. So he goes and declares it and takes the cash literally and flies out to Dubai. And beyond that is business as usual, I think. So de-risking remains a problem. It is beginning to hurt also small trade, finance and all that. So it's not only migrants that are being hurt, or money transfer companies. And I don't see any light at the end of the tunnel. All I can say is that I'm getting a lot of requests from European countries and Canada about the urgency of doing something about remittances to be seen to be doing something on migration and development. So it's not coming from the remittance angle, it is coming from the angle of doing something to address the challenge of migration so that there will be more development, there will be more jobs, and then they won't come.
Thank you. Michael, did you have a question? No? You're holding the mic, so.
So maybe, I don't know if this, can you hear me?
I can hear you very well, Mike.
Okay, great. Well, it's good to be talking to our very own celebrity. I always send my new staff to watch your TED Talk just when they join. The Justin Bieber of money transfer. I guess you've been I've known you since I started in the industry, and I think you've been at the World Bank for like 25 years or something now, looking at the sector. I would just ask you, compared to where you think we should be, or where, and with a very long timescale of looking at this sector, are we further ahead? Are you optimistic? Are we ahead of where you think we should be, or are we still way behind? And there's always work to do. But should we be congratulating ourselves on the industry for where we've managed to get to, or are you pessimistic? Are you long or short at this point?
I am long on the industry because of the projections that costs are falling. There is a little more competition than before. Little more, not too much, but little more. The startups are beginning to have some impact, but not a lot. In large corridors, they have made some inroads, but there is the rest of the world. But the projections for migration, combined with improved technology, would mean significant growth rate in revenue for the remittance companies. And that is a simple phenomenon that if you have a pricing, let's say $10 for up to $500, that's the fee structure, then the migrant is saving money until he has or she has $500 to send money. If the cost was, let's say, $5 for 200, then the person will wait until he has 200 to send money, right? If you reduce the cost, the amount of the average size of remittance transaction would fall, but the person will send more money more frequently. That is the reason for the elasticity. If you combine that with the major surge in migration flows that I'm thinking of, then you are looking at a significant growth in the volume in the remittance markets. So that is the positive side of the story. Where we have gotten stuck is the old market practice. The one who has capital is the one who would win. And somehow the fintech boom that we had 3-4 years ago, and we all wanted to, including a little bit that things got a bit sidetracked with the Bitcoin and cryptocurrency and ICO bubble a bit. Around that time there was excitement and I thought something will happen, but it did not because of the de-risking issue, because that also kind of peaked around the same time because of the refugee movements. Wrong kind of movement. And you know that since then we have gone completely opposite to the globalizing trend that we should have seen. The world is shrinking onto itself. Everybody is shrinking inward. I don't want to deal with the neighbors anymore or the rest of the world. That is the feeling. I think we got hit with that, and the security wonks sort of overcame the development guys, the pro-globalization guys. That has hurt us. And I think a reflection of that is in terms of private equity and venture capital sort of losing a little bit of interest. And then we had the 10-year odd period of startups. And those guys want to exit, the investors, not the money transfer companies, the investors. So we have a little bit of a sell side story going on. So some consolidation, some are able to succeed, but only a few have been able to succeed. And those will be great. And there'll be now, instead of 2 players dominating the market or 3, I have a feeling that it'll be more like 4 or 5. But the worry is that everybody wants to sell off to the big guys, or the big guys want to buy every small guy, and they will perpetuate the oligopoly structure. That's where we haven't made a lot of progress. But you guys know, and you, Michael in particular, and Mohit, you guys know the story.
Dilip, one last thing before we let you go. Just want to get your comments on this ugly issue that keeps rearing its head in terms of governments trying to tax remittances, right? I mean, it's a Middle East phenomenon, Italy, and one side we've just talked about this SDG goals, we've talked about harmonization, and then the same people or their counterparts then say, oh, we'll just tax migrant. I mean, I'm sure they're all coming and talking to you as well. What's your feeling on that?
Yes, and I'm glad you raised that point. I should have mentioned that is a structural change, and that is part of the story of also anti-globalization sort of shrinking inward sort of trend. That in a number of countries, especially developed countries, and the GCC countries in particular, there are a couple of them who are thinking about taxing remittances or have put a tax on remittances. These guys are actually trying to create employment for their own people, the so-called nativization or mitakat policy, and they think that if they can tax remittances or tax even hiring of migrant workers, both happen by the way, they levy on foreign worker as well as taxing remittances, they are able to then create more employment for their own people because hiring foreign workers will be discouraged. That is their thinking. What they don't realize is that, if you put a levy on hiring foreign workers, and even if the levy is 200%, which it is not, but even if I'm just making it up, if you are hiring somebody at $200 a month and you put a levy of 200%, then if the cost goes to $600, I mean, does a Middle Eastern GCC middle income family care about that total amount? In other words, that's not going to work, so it's misplaced. Taxing remittances does not work anyways because money will go all around. We know that, but that has not helped in terms of the politics, and part of that, unfortunately, is a geopolitical reason. There is the side of some developing countries also trying to tax remittances. That is more worrisome. And there the argument is, what in the literature was called sometimes Bhagwati tax. It was like all our doctors went abroad, we trained them, we never collected any revenue from them, so we should tax them. It's not exactly that, but something similar is going on. And we are telling the countries that these people have been taxed already, they have paid tax, then they are sending money home, and these people are poor people. So if you tax them, it's a highly regressive tax, it's a double taxation, and anyways, administering this tax will cost you more than the revenue you generate, because these guys will quickly go into the informal sector. But that hasn't stopped the tendency. Luckily, I think it is contained. I don't think it is spreading.
Right. I think we'll bring it to a close. Dilip, thank you so much for taking the time. We do hope to see you in person next time rather than Skype, but thanks so much for doing this. Good.